All right, we've got a little bit over 2 minutes until we get it underway. Jules, shout out to Jules in the YouTube chat being the first one to check in. We are 120 seconds away from getting this thing started. KB, what's going on? And for that Christmas rally, I guess, peeking ahead a little bit, futures already down 0.85%, a little bit scary. We'll see where that number ends up, but things are looking a little bit interesting off the bat right now tonight. Minute 40 until we get it going. All right, 20 seconds away. There we go. We've got Morph4, we've got Sleepy Condor, we've got VS. How's it going, guys? 10 seconds away from getting this thing going. 3, 2, 1, and we are going to get things started. So let me get this notification out of the way. And thank you again to those of you who have been joining us week after week and are with us again for our special, I guess we could call it Christmas edition because we've got a giveaway tonight, but the Christmas edition of our weekly stock market scan. So I guess another high-level summary real quick, not just for what we did last week, but for what's been going on this year so far. Those of you who've been following along with us know that, we had a really, really rough start to December, and we're calling this December because most of this week was December as opposed to November, but we put ourselves in a pretty big hole because of Palantir and because of DraftKings. Two stocks that are pretty beat down overall, but I'm pretty confident that at some point they'll at least level out and rebound enough for us to break even on those. So as it currently stands on Palantir and DraftKings, we're down roughly, let's see, come on, load for me. We're down about $4,800 on Palantir. We're down about $2,700 on DraftKings. So between those two, we're down about $7,500 yet. Despite that, just last week, after the huge initial loss in December, we're back up $1,500 so far on the year. So really, long story short, we just hoped that we would be able to be green in December, period. The fact that it only took us 2 weeks to recover what really has been by far our worst week in a long time, I think has been really, really nice and a solid testament to what we're doing as a part of this strategy. So then I guess going back down to the micro level, let's take a look at the individual trades that we had last week. And I think, I should have updated this to 12/12. Pardon me right there, but let's take a look at what we did to actually accomplish that. So a lot of what we did 2 weeks ago, we talked about that on last week's stream. We recovered a big amount on a DraftKings rebound and a little bit of a Palantir rebound. Not a huge one, but rebounds on DraftKings, Open Door, CRISPR, and just a lot of these positions that were so heavily beat up that first week of December rebounded a little bit to get us close within striking distance, and we finally bridged that gap and got back to where we needed to be to turn profitable in December. Cash Money, what's going on? Welcome to the stream. Coastal Bassin, how's it going in the YouTube chat? Looks like we've got someone with their phone on 10%. You better go find a charger. We've got the giveaway tonight. I'm super excited for it. And Sierra, welcome to the chat. But top to bottom, BRPM, this one has not been going as great as we would have liked, right? We got these shares at about 1080. Our thesis was that it really had the potential to pop off to, a really nice number, and there was limited downside to 10. So we were okay with the potential downside on that trade. if the stock did in fact pull back to 10. That's what we've seen so far. But again, we're going to hold on to this for at least a couple more weeks because their merger isn't until Q1 of 2022. We're going to want to get rid of this by the merger date so that we still have that $10 price floor that we could rely on. But again, no harm in just holding on to this one for a few more weeks, seeing what happens. If we lose, we lose. I think it was still a smart trade. Not every smart trade's going to win, but we'll move on. SEAH is another one that I think in theory, the way the numbers worked out, was a decent trade, but didn't work out for us, right? Because we ended up getting these shares for about, let's see when we entered in here. Got them for $10.57 and we're able to sell 11 strike calls for 30 cents of premium. That gave us a $10.27 break-even price. It went below that break-even price down to $9.95. It was a similar idea as far as having a $10-ish price floor like BRPM. It just didn't go our way. We lost a few $100 on that, but again, that's okay. We're going to keep putting ourselves in the situations where the numbers are in our favor, and we're going to keep doing that week after week after week. And eventually, the hope is that that's going to pan out more often than not. And if you look at our year-to-date summary, it definitely has panned out more often than not. Keep getting back to this fact that we have not lost money a single month on the year yet so far, and we're going to keep trying to keep that up. So back to the weekly tracker. Palantir is one that we talked about a little bit earlier. We've been rolling that from week to week to week. And we did have one request in the Discord server to kind of walk through the idea of what we're trying to do with that. So I think it would be really helpful if we did kind of take that one from the top, go to this trade breakout tab, and talk about how we've managed Palantir. And for a little bit more context in this conversation, let's pull up the Palantir. Futures down 0.92%. It could be a dicey morning tomorrow. So we'll definitely have a game plan ready to go. So as you can see by the incredible amount of red lines here, we have a ton of different analysis that we've done through different time periods, different price points. So I think we've got a good finger on the pulse of the typical price action on this stock. And we're particularly comfortable with this $18 price level. And ironically, that's the one line that we don't really have drawn here. But if we draw that at 18, we extend that to the left. We'll step back when it bounced in roughly May of 2021, May of this year. It bounced right around this level. Now, it did dip down to 1635 before spiking quickly back up, but I don't think that's something we should really take into consideration because it was such a quick dip and subsequent spike. And I mean, when it spiked, it really spiked. It got all the way back up to 21. So some sort of $4 spike like that would put us, 22, 23, put us well above our break-even price. So the idea with what we're trying to do with Palantir right there was this big drop post earnings, and that created a lot of implied volatility. We wanted to take advantage of that implied volatility, so we sold some puts that had a break-even price. If I go to the actual trade itself, we sold 24 strike puts for 25 cents a premium, and we did that when Palantir was at 24.80. And that set us up with the 24 was the strike minus the 25 cents of premium that we sold. That set us up with the 23.75 initial break-even price that you'll see right here on our spreadsheet. That initial break-even price fell right about here. I think this red line is our initial break-even price. However, as you can see, the downtrend on Palantir kept continuing. It kept bleeding out, which, RSI would indicate that we were hoping for some sort of stabilization or a bounce. We didn't know exactly when we were going to find it. We identified 21 as a little bit of a level of support, and it did bounce off there for a few days before legging back down to 20, which was another level of support that we identified. It broke down through there, but now it looks like we're starting to find a little bit better area of support. And as what's going on, Morpho, as he just suggested in the chat, I think after it broke down through 21, broke through 20, it really does look like 18 is going to be, quote unquote, the next stop for Palantir, because this is where we had a little bit of support previously. If we, go beyond the 180-day chart, this thing hasn't been traded for too long, right? They IPO'd back in September of 2020, so it's tough to really identify any support below 18, but at least in the short term, the way that it's bounced off it multiple times, if we zoom into the 20-day chart right here, we've seen 1 bounce, 2 bounce, 3 bounce, and a really, really bullish 4th bounce last Friday as it jumped from, sub 18 at one point briefly Friday morning up to about $19 at the close. So with this price action that we've seen, we're starting to be a little bit more comfortable about 18 being a really solid level of support that we could begin a little bit of a rebound from. Now, big picture, moving back to this 180-day chart right here, I mean, we've dropped from 28 down to 18. That's a $10, roughly 40% drop from the peak. And from when we entered, when the stock was at 24.80, it's a 23% decrease in the price of the stock to where it closed Friday at 19.06. That is a significant drop. Can it keep continuing down? I mean, absolutely. But as you'll see, if you look at different trends throughout the history of the trading price, and this isn't exclusive to Palantir, this is pretty common across most stocks, even if it is going to be in a downtrend, maybe even to like 16 or something like that, there usually is some sort of intermediate period where you get a little bit of a bounce. And I could absolutely see a bounce back into this 20 to 21 range where we had a little bit of chop from November 22nd up until December 1st. So that's kind of the range I'm targeting in the short term for us to get back up to. And then if we get up there, you keep running back to this TA that we hit on the way down, and those levels that were previously perceived as support are then going to be resistance. We just keep hoping that on a day-to-day, week-to-week basis, we can continue to break through those. However, let's talk about how we managed the trade itself. So we initially had this 23.75 break-even price. That didn't work because we saw the chart. It was crashing through that pretty rapidly, and it was starting to fall, at a very accelerated rate. So it kept dropping, and what did we do for part two right here, right? We followed the H2 wheel process. We took assignment of the shares right here. We were manually assigned the shares from number one, which were the initial cash secured puts that we sold, and then we sold covered calls as part of a strangle. And then we would know that the other half of that, in addition to the covered calls for the strangle, is the cash secured puts. So we got 19 cents of premium on the calls, 24 cents of premium on the puts. That dropped our break-even price to 23.32. But again, as you can see from the loss that we took on the puts right here, Palantir continued to drop. Now, we didn't really want to keep rolling these down because that, takes away some of the potential profit that we had. So we rolled them to the same strike for a credit. And that credit that we got was 26 cents, right? We bought to close for 70 cents. We got a credit to open of 96 cents. Excuse me. So that was a 26-cent credit. And a 26-cent credit, I guess, kind of following the logic that we like to use when we roll these things, a 26-cent credit on a 22-strike put is roughly a 1% ROR. When we roll things for credits, if we can roll same strike and get roughly a 1% ROR, that's an opportunity that I think we would like to take. Now, you can always get into the situation where if we rolled down and out to 21 and got a credit, that would be a good move. But I think thinking back to that, we were in a situation where we weren't able to roll down and out. But again, rolling down and out for a credit on a trade that moves against you, that's option one. We did that with Fubo, and we could talk about that a little bit later, but that's option one. Option two is, keeping that max profit on the table, rolling for a credit, trying to get a credit that's equal to about a 1% ROR on a weekly basis, and then going from there. So another week passes. We go from our 11.19 expiries to the 11.26 expiries, and as you can see, it continued to drop, right? The calls we sold, obviously, those hit max profit. The puts we sold were right about break even, and that's the advantage of selling out of the money puts, right? Because if a stock stays flat, if a stock goes up, you guessed correctly, you make the money. But again, you get a little bit of protection because if the stock drops down to the number that you sold, you have that little bit of cushion, and you can still break even. So on that week, while we did lose a little bit of money on the shares that we sold because the stock dropped, we were able to get max profit on the calls, roughly break even. So we picked up about $250 of premium. And then the week after, the week going into the December 3rd expiry, which if we look at the chart, is going to be right around here. This is when we had this big drop down from 21-ish to 18.50. And that's when it got really, really tough on us because, we'd already deployed the covered strangle, which increases our position size. We want to be really hesitant about when we increase our position size again. So we weren't really ready to do that. But what we did do was instead of selling 24 calls, we did roll an 11.26 down to 22. And then we kept that same, it's called a straddle now, right? A covered strangle is if we sell a covered call above and a cash secured put below. The covered straddle is a little bit more defensive, meaning we sell them at the same strike. So that's what we did for this December 3rd pair. We sold 22 and 22, but again, during that week, Palantir dropped even more. So now the question is, what do we do? Because at that point, we had our break-even price down to about 22.37, which since we sold 22 strike calls, we weren't going to get it back entirely that week, but we were going to be okay just coming close to breaking even, right? If you're in a position where a stock has dropped this much on you this quickly, you kind of need to get that idea of immediate profit out of your head. And to answer that question from BizPhone in the YouTube chat, ROR, rate of return, you are dead on right there. That's what that stands for. So we needed to get that idea of turning a profit that week out of our head, right? It's dropped a ton on us. We need to be smart about what we're doing, try to collect as much premium as we can, and set ourselves up in a position to get back to that break-even price. So we rolled down to a 20 strike put. So what did that do in terms of our break-even? Because interestingly enough, you'll see right here, our break-even went from 22.37 up to 24.10. Why did that happen? The answer is because by rolling from 22 down to 20, we sacrificed $2 worth of strike, basically $2 worth of premium. And since we're sacrificing that gets added back to our break-even price. So briefly it increased, but we're not too worried about that because the plan is to get it to bounce back up to 20, and then we could roll these things back up to 22, and then that'll instantly drop this $2 a share. So we're going to want to keep that in mind for our break-even price, the fact that we have the potential to quickly drop this another $2 if we roll back up to 22. But in the short term, there's not really any premium around 22, right? The stock's trading at about 1906. If you go to the weekly option chain, and this loads right here for us, at about the 22 level, you're only getting 2 or 3 cents of premium on the calls and, probably a similar level of extrinsic value on the puts. So it's not worth it to sell those options. We want to drop down to 20 where we can get about 15 cents on both sides right there and have some sort of extrinsic value to take advantage of on a week-to-week basis. And the hope is that when Palantir reclaims 20, then we'll be able to roll this straddle that we had up to a higher strike and then do a little bit more damage to that break-even price. So it's not going to be a one-week process. Obviously, we started this thing at the beginning of November, but we're going to be patient. We're going to wait week after week. Palantir is one that I'm confident in as a stock, right? We're not breaking the golden rule of option selling, which is to make sure that we only sell options on stocks that we are comfortable taking assignment of. And that's definitely the case for Palantir. They have revenues to back up their valuation, at least more so than some of the other stocks that come across the board. But, if the market does continue to go down, they fundamentally are a decent company that makes money. So there is some value in that stock as opposed to, what we did with Hyliion over a year ago, where we were pretty much chasing a stock that was very, very speculative in nature. That was one of the biggest lessons we learned in investing. While this may seem annoying to be losing money on a short-term basis, this is one of those things where if I knew how to put a GIF up on the screen, I would put up that trust the process GIF. You can take a look at GHIV where we went through a similar process that took a little bit of time, but we ended up with an $11,000 profit despite a 12% increase in the stock. And that was over a, 27, so about a 6-month period on GHIV. But, the point is, if this is your first big loser that you've kind of had to roll week to week to week, it can get annoying, it could get scary, it could get frustrating. But that's where it's kind of helpful to be in a group like what we've built, in a community like what we have, because other people have been there before. This isn't the first trade that we've lost off the bat, and this definitely is not going to be the last trade that we have lost off the bat. We're going to stick with the process, keep chipping away at this break-even price. On a week-to-week basis, we can always lower our break-even price, but the stock can't go down forever. So we're going to stick with that process, stick with Palantir on a week-to-week basis. And we rolled this 20 strike put from 12.17, as you can see on this tab over here, to 12.23. And finally, our break-even price is 22.95. And again, keeping in mind that if Palantir reclaims 20 this week, one, we're going to make about $2,000-ish from that just this week, and two, that'll allow us to roll these strikes higher, which will do a lot more damage to this. So we could conceivably get this down near 20-ish. I think by year end, and I think that'll be a good place to be, right? If we've taken our break even price from 23.75 down to potentially 20 by year end in just 2 months, I think there's absolutely nothing wrong taking a look at Palantir's chart here with owning Palantir at a price of 20, looking at where it's historically traded at. So that's something I'm super comfortable with. We're going to stick with it, and that is kind of the spiel on what we're doing with Palantir. All right, so I guess what we could call the other part of those 2 losing trades that we've had, DraftKings. This was one we did play a little bit extra defense here, right? So we initially sold the 32 strike puts, and we can kind of walk through the trade breakout tab here as well to talk about what we've done. It was trading at 36. We thought we sold a 33 strike put for 38 cents of premium, and again, 38 cents of premium on a 33 strike put. That's just over a 1% ROR. The numbers added up. I liked the cushion that we had, but of course, not every trade is going to go our way right off the bat. This thing dropped 20.36% in the less than 1 month that we've been holding on to this so far. So we've definitely taken a little bit of damage on this one, but similarly to Palantir, we're gonna be okay. And there's Harry in the YouTube chat. He is, I would call him Palantir's #1 fan. He is a big time Palantir investor right there. So we're all rooting for Palantir to make a rebound, and I'm pretty confident that it will come back up at some point. But again, DraftKings, really similar situation, right? You try to use RSI, you try to target a point in time where RSI is super depressed, back when it was at 36 around the back end of November. And then it did level out a little bit. And, it's tough because it kept going down, right? We love RSI because it's a pretty good indicator of short-term relief. And we did get some, in a literal sense, very short-term relief over this 3-ish day period right here where it bounced off at 36. But 1, 2, 3 big red candles took it down to 27. Got back down to 25.8 at the low point last week. And let's talk about what happened last week. So, it peaked at 33.93 back on December 8th. And we thought that we were going to be able to get out of this trade with max profit on these things that we sold on these that we sold about a week or so ago and completely recover. But as is the case with the stock market, it can be pretty scary, right? You never really know what's going to happen. Big swings up, big swings down. The one thing that we can do for sure is manage that break-even price. So even though it went back down, does suck in hindsight because we could have closed out for close to break-even. But again, the thing could have kept going higher or stayed flat, and we could have made money. We never know the answer to that. I think the most likely place for a stock to be a week from now is exactly where it is today. So that is the thesis that we play off of. And if it does move against us, like we've seen with Palantir, like we've seen with DraftKings, we're just going to stick with it. So here's the decrease that we've seen. If you go back to this trade breakout tab, 20.36%, that's a pretty big move against us. But looking back to this break-even price tracker, this is kind of what we're working with. We initially had a 32.62 break-even price. We're chipping away week after week after week after week. And one little wrinkle that we had last week was instead of taking assignment and launching into a coverage strangle off the bat, we just sold some additional puts, right? And if we sell these at a 1-to-1 ratio, that's going to be a cent for cent reduction to our break-even price. So while headed into last week for this 12/17 expiry, we had a 31.93 break-even price. When it dropped down to 26.50-ish at one point last week, I think it was right around here when we entered on Wednesday, December the 15th, we said, hey, this move from 34 to 27 is really, really exaggerated. I think this is way oversold. RSI suggested that it was oversold. We're going to play a bounce. We like the stock. So we sold some 26 strike puts. Those obviously went pretty well. We hit max profit on those. And while we cleaned up $240, and while in the scheme of things we're still down $2,700, we've got a little ways to go. Every little bit counts, and that 24 cents of premium we got knocked our break even down to 31.69. And then we rolled these 32 strike puts that we had for last week to 32 strike for this upcoming week. That leaves us some upside at 32, drops our break even price by the credit, right? We bought these to close for 318. We sold to open for 350. That's a 32 cent credit, and you'll notice that 32 cent credit on a 32 strike is a dead-on 1% ROR. So we were able to roll the same strike, get a credit that's worth 1% ROR, and that's exactly the type of trade that we're looking to set up while still leaving ourselves upside at 32. So I thought we got a great roll, a great credit, and it did help big time that, DraftKings ran up on Friday in the face of a market decline. But, after falling so much, that's just kind of the way these stocks work sometimes, right? You can only go down so much before getting at least a little bit of short-term relief. And it's not similar to the gambler's fallacy where you could be sitting at the roulette table and saying, hey, I've seen red on the table 6-7 times in a row. I'm going to start betting on black. Roulette is a series of independent events, and that's what the gambler's fallacy relates to. The stock market is not a series of independent events, and there is some buying as a consequence of selling at some point. And the concept of mean reversion, where something falls all the way back and reverts up to the mean, is definitely a very real concept in the stock market. And these are the kind of ideas and theses that we play in these trades. So the idea there was to keep that upside at 32. We got that 32 cent credit dead on the number for the 1% ROR that dropped our break-even price at 31.37. And we just move on another week, right? We can keep lowering that break-even price week after week. Stock isn't going to go down forever. And if it does keep going down, we could do similar to what we did last week, where we maybe sell some more puts, see if we can take advantage of some inflated premiums if it continues to drop a little bit further, and knock this down to 31-ish. But, a couple more weeks to go in the year. I think we could get this near a 30 break-even price. And again, one of these things where if we zoom out on the 180-day chart, you're telling me this thing's moved sharply against me, and the worst case scenario is that we end up with stock that has a basis at this level compared to this 180-day chart. I think at the end of the day, we're looking pretty good, and that's a decently manageable position. So that's the plan with that one. We're going to keep rolling it forward. It is a little bit annoying for us to have, a decent bit of capital tied up in Palantir and DraftKings because it does reduce our flexibility a little bit on a day-to-day basis in the market, but that's just how it works sometimes. You got to stick with it, trust the process, and it's going to work out for you more often than not. But that is what's going on with Palantir and DraftKings, kind of the two maybe hot button stocks that we've been on because they've been causing some pretty big swings in our account. But again, bigger picture, despite how big that drop in Palantir and DraftKings has been for us, we've lost about 7,500 as it stands right now on those. We are still green in November, as we mentioned at the top, or green in December, as we mentioned at the top of the stream. So what we've done outside of those, despite, the decrease in the market, has been pretty solid. And at a high level, we made $3,663 in the market last week. That's a 2.11% return, and we got that 2.11% return in the face of a 2.31% drop in the market. And that is really all we're trying to do on a day-to-day, on a week-to-week basis, is outperform the S&P 500. We're going to have great years like we're having right now where we're up 105% with a couple weeks left in the year. But at the end of the day, all we're trying to do is what we've got pointed out on this chart right here, which is just beat the S&P 500 performance through our option selling strategies. It's something we definitely think is feasible as a retail trader and something that we have consistently done and hopefully can continue that success into 2022. But these strategies, these trades that we've been outlining so far on the stream tonight, that is how we're doing it. So moving a little bit further so we could hurry up the recap for last week and get into what we're looking at for the upcoming week. We had some open shares, actually. We let these expire, so we got the full credit, the full $1,500 profit last week, and we were actually assigned the shares. So we were assigned shares with the 15 basis, and by Monday morning, those shares were worth $1,520. So not only did we get the max profit of $1,500 last week, since we were assigned, luckily, we were actually able to get $200 more of profit just off the shares. So that one worked out really well. It's not often you're going to get more than max profit on a trade, but that's exactly what happened to us. Corsair was one. I was pretty happy with how this one turned out, right? So Corsair, we sold 22.5 strike puts. If you go to CRSR right here, you'll see it's another one with a really similar trend to Palantir to DraftKings, where there's just been some general selling pressure, leading to a point where the RSI got really depressed down to this 30-ish area and then leveled off before, bouncing near the bottom. So this was one where, if we took a step back, we said, hey, we sold these 22.5 strike puts initially for, when did we first get into these? We could find the Corsair 1217. We sold these for 78 cents a piece, meaning our break-even price, if we get on here to the tracker that we had, our Corsair break-even price was going to be $21.72. And in the face of the market dropping 2.3%, we had some money tied up in Palantir. We had some money tied up in DraftKings. The market was looking a little bit shaky with some Omicron COVID fears, with some inflation fears, a lot of uncertainty. We said, hey, in the face of this big red day in the market, we have found ourselves, and if we go zoom in on the 5-day, Corsair had a really nice move on Wednesday, which held into Thursday and Friday. And on Wednesday, we were looking at a decent loss on this one, right? We sold these for 70 cents a piece, and these would have been worth about double that, meaning we would have, our loss on that trade would have been equal to our potential max profit. So we went from that position on Wednesday morning to a position on Friday where we said, hey, instead of just rolling these things to the next month, to January, and having to wait 4 more weeks, we could just exit this trade for a 53-cent debit, take home $1,000 of profit on the week, and pretty much take home a couple $100 of profit overall. And while that's not, a huge home run number of, of a return, taking home $200-300 over a 3-week period, the fact that Corsair was able to drop this much over the last 20 days, the fact that we had a bullish position on a stock that basically did this and we had a chance to make money, that's something I'm going to take 10 times out of 10. Because we say all the time, and it sounds, overly reductive and kind of stupid to say, but, if you never lose, you win. And we had a chance to take what could have been a losing trade. We had the opportunity to exit for profit. We made a few $100. We didn't lose. We won. And if we keep doing that with every single trade, we're going to have some really nice performances in the long run. And that's kind of that mentality of not getting too greedy. Could Corsair have run up? Could we have rolled this thing, dropped our break-even price further, and waited another month on it for the January expiry? Absolutely. But we had money tied up in Palantir, had money tied up in DraftKings. I mean, at one point a couple weeks ago, we had 191% of our account. We were a little bit leveraged, and that was in the face of a pretty big drop in the market. And that is what crushed us in the first place. So we said, hey, let's learn our lesson from the first week of December. Let's take some cash off the table, and let's hoard a decent amount of buying power for the upcoming week. And that was the idea there. So we got out of that one, freed up some buying power, took $1,000 of profit on the week, a couple $100 of profit overall. And it was, while not a huge home run, it was a successful trade. And Fubo, this is one that we've rolled into the following week, right? And I'll have to make a little trade breakout here, but we were able to roll this one for just about even money. We rolled it down to 16. And while we did roll it down to 16, I think it was for a slight debit, which means we took a little bit of profit off the table. To make up for that, we rolled this to a position size of 10 of the 16 puts for next week and 5 of the 15 puts next week. So by increasing that position size by 5 by introducing the 15 strike puts, the profit that we'll get on those is going to make up for the profit that we potentially lost on the debit on the roll. And apologies for not having that trade breakout tab ready to more clearly visually explain that, but that was the idea with that. So SoFi, that one went really well for us. We took $230 of profit on that one. Roku was a good one for us. We basically, I think, damn near called the bottom, but wanted to take our profits when we could not get greedy. Open Door worked well. AMC worked beautifully. Robinhood worked well. And, just these 5 trades right here, that's $811 of profit. While these are small trades individually, they're individually high probability trades. We keep putting more of these into our portfolio. That adds 1, diversity, and 2, some really nice expected value trades. And these add up to decent numbers, right? We're not going to try to knock it out of the park with 1 or 2 trades, but we're going to keep cumulatively adding these on top of one another. And then CRISPR, I think this may have been my favorite trade of the week because this one came back to life out of nowhere. And we've got the trade breakout tab here, right? So we started playing this one at 91. And this is one where, following that golden rule of not selling anything that you don't want to take assignment of or potentially own, this is one of those for me because I'm a huge fan of the stock. It's like, as far as a futuristic type stock, they are into gene editing and things of that nature, which I think is a really interesting area. But to the point of back on December 6th, this thing got down to 67. And if we zoom back to the 180-day chart, you'll see another one of these trends where there's just been a really steady bleed out. And you'll see, this looks like Palantir, this looks like DraftKings. But once it finds that bottom, it doesn't take much of a rebound, right? When it drops from 123 to 70, a run back from 70 to 82 really is kind of nothing in the scheme of things for how far things like that have dropped off the bat. And if I pull that DraftKings chart up one more time, and if I can spell DraftKings correctly for you guys, that's kind of what we're going for here, right? We're hoping that it finds a bottom, and if it's dropped from 49 down to 25, a rebound from 25 up to even just 33 right here for us to hit max profit, or 32 rather, and get all that money back, that is not much at all in the scheme of things. So we'll go back to that CRSP, and that's what you see right here with these big green candles to get us back to where we were. But again, it was one where we believed in the stock. We didn't want to roll down, so we rolled down initially, right, because we could roll down and out for a credit, which is option 1. If you could roll down and out for a credit, we definitely do that. And we did that by buying to close for a 197 debit, selling to open for a 225 credit, and that knocked our break-even price down off the bat to 79.81. So we liked that, but again, the stock kept dropping like we saw on the chart that we pulled up a second ago. It got down to 67.15 at the base. And at that point, we were sitting on a pretty decent loss right there. I think these weeks combined put it at a, if I can highlight the right cells right here, roughly $3,000 loss on the position. But what did we do, right? We don't panic. We don't freak out. We trust the process. We know what we know. RSI was getting down to the blue right here. This is our favorite indicator for short-term relief. And when it got back in the blue, it rebounded very sharply. So we wanted to keep that strike up at 83. So we were able to capture the extent of that rebound. And that's exactly what we did. And it didn't happen 1 week. It took 2 weeks to get back to where we needed it to get to. But again, it bounced up. We trust the process. It got back to 82.60. It looks like 82.73 at close on Friday. So we could have gotten another $300 or so. But again, following the theme of not wanting to get greedy here, we found ourselves in a position on Friday where we said, hey, we've pulled way more profit out of this trade this week than I anticipated coming in. Looking at the overall trade, we're at $807 a profit over about 1.5 months. Despite the fact that this thing has dropped 10% on us, let's get out of the trade. Let's take that profit. And if we want to get back in, we can with the lower strike. But for this, cycle of the HT wheel individually, this is what we decided to cash out at 807. Again, if we don't lose, we win. And this was another win, similarly to Corsair that we just talked about a second ago. But to the point of getting back in, if we still like the stock, right? I'm always a little bit wary, when things get oversold down here, I'm like, okay, it's begging for a bounce. But when things bounce back up really quickly, I'm equally wary of them quickly falling back down and leveling out. So here it'd be roughly in the high 70s areas where I'm wary of CRISPR falling back down. But, we pull our money out, we wait a second, and if it does fall back down to the high 70s, we could take advantage of a big red day on the stock to potentially re-enter. And, there's still some decent premiums on CRISPR Therapeutics. So that's one, if we do see another red day, that we'll probably look to enter back into. But all in all, that was a 40-minute recap. It got a little bit longer than I typically like, but that is what happened on the week. I thought it was pretty important to talk about what we've been in on a week-to-week basis and how we've managed these positions, because it could get a little bit sad in the Discord server because we're all kind of in these trades together. We're all doing the same types of things. So when we have a week like what we had the week of November 28th, it could be a not so fun place to be in our Discord sometimes, because it's never fun to lose money, simply put. But the idea is that if this was the first time that this happened to you, it could definitely be scary. But I hope that you trusted us, trusted the process, and managed the positions and trades in the same way that we did. And just like that, we're back to a point where cumulatively in December, after 2 weeks ago, hating everything about the stock market, we're now green in December and outperforming the S&P 500. And in addition to that, with all of these positions that cleared up, right, we rolled Fubo, but SoFi, Roku, Open Door, AMC, Robinhood, CRISPR, these are all off the table now. We have a decent amount of buying power ready for Monday morning to jump back in. The only things that we're really holding on to for next week are, the Palantir position that we talked about that we rolled. DraftKings is one that we rolled. Open Door, we sold some 13 strike puts on those to get back in because the premium looked decent. But outside of that, we don't have a ton for the upcoming week. So we've got a good amount of buying power, and that's looking like it was a good move because the futures, there they go. They're minus 0.93%. And now, that's not to say that the market's going to be a bloodbath when I wake up tomorrow, but, there's kind of two schools of thought, right? You can't really have a minus 2% day without having a minus 1% day first. So the first thought, which is, I think probably the safer thought is, okay, things can always get worse in the market. So we want to do everything that we can to potentially protect ourselves. But then the other school of thought is the fact that, I've seen futures go from minus 1.5% to, green by the time the market opens in the morning. So don't panic. But whatever happens when we wake up tomorrow morning, guarantee that we'll have a plan in play. But before tomorrow morning, we can also formulate another plan, get some ideas on the watch list. And I came ready finally on the stream. I've got some notes right here. So the way that I'm going to try to break this stream down, if I get these notes here, there we go. So we've got different strategies that we like to use when we sell options, right? We've got the typical HT wheel, and we kind of stratify those as well into safer and premium chasing type plays. We've got earnings trades. We have 10-day trades for earnings. We have IV reversion. And then I want to do something called like a little bit of an oversold alert, where we look at, we talk about RSI so often. I really want to take a look at some of the stocks where RSI is really, really in the gutter and see if we've got some opportunity there. So that is going to be the list that we're kind of working off of. And as always, if you've got something that you want to see us take a look at, feel free to throw it in the chat. But additionally, one other special feature of tonight's stream is that we are having a holiday giveaway. So everyone who is watching along right now will have the opportunity soon here to just throw a message in the chat. And I'll start it right now. If you want to enter the giveaway we have, and I guess I can announce what the giveaway is for right here. If I can open up a tab over here and pull it back in, give me 30 seconds. But the idea, if you want to enter the giveaway, just type HT into the chat in the live stream, and we will enter you in. And at the end of the stream, we are going to have a live drawing for the winner. And the prize that you're going to win, ta-da, is your very own HT Yeti tumbler, which is probably super, super small on the screen right now. But there you go, stainless steel, the custom HT logo right in the middle. You are going to be the coolest investor in the world drinking out of that at your desk in the morning. But how do I make this bigger? Here, hold on. Oh, there we go. Front and center. So that is what it looks like. Slightly blurred from blowing up. But, you've got a legit Yeti tumbler if you would like to enter into the live drawing that we're going to have at the end of the stream for that. Just type HT into the chat, and we will add you to the drawing. So now that we've talked about last week, let's get into next week. And before I get into next week, as always, the obligatory self-promo section here that I'll try to make super, super short. Hourglass-trader.com. We just flashed our Discord server up a second ago, but if you want to get in on this, if you want to kind of join the fun and trade along with us, see the exact trades that we're making, get alerts to entries and exits for every single trade that you've seen on here that has led us to the 105% return that we've had on the week so far, a profit every single month of the year. If you'd like to be alerted to that and some extras, hourglass-trader.com. You're going to want to go to join HT Premium. We've got a monthly, which comes with a 7-day free trial, no financial commitment, so you can figure out if it is right for you. And then we also have the annual, which a lot of people latch onto as well because it's a 25% discount as opposed to a monthly. But what are you going to get with that? The answer, first and foremost, is our premium chat rooms in our Discord server. If I pull this over here, you get the premium chat, HG trades, which we talked about right here. You can see entries and exits with tagged alerts for all these. And like the 4 that we talked about from our weekly recap right here, this $875 of profit just on the ones that we had expire last week. But, every single trade, entry, and exit that we make is in here with explanation if necessary. We've got different types of strategies because, it's not just me, right? I think a lot of the value here is our community as well that we've built. So we have some really talented, really intelligent traders in here. We've got trade plans that we'll write up every now and then if we need a game plan, like at the beginning of December when things were getting really rough. We wrote up our game plan right here, and that's what we've executed to get ourselves back to, profit on the month overall. We've got a live watch list, which, admittedly need to update. I've had some things kind of fall to the wayside. And then we have our option scanners that we use to find our trades, right? So if we go to the scan tab right here in Thinkorswim, click over here. I guess we go to the option hacker, click over here, and you click to, click right here. There we go. To load personal scans. And we have all of our preset scanners right here. And we have links to those on the option scanner section, which is part of our website right in here. So that's what we got, HT Premium. Zero financial commitment, takes 1 week. And I think a lot of people who have done the free trial have made enough in 1 week to pay for the entire month. So I think it's been a really solid experience, really solid value on that side of things. And I think those who are members can attest to the value that we have in that. So it looks like we've got a lot of entries to the drawing right now. We've got a question saying, can you quickly over choosing the best trade from our dynamic scanner? Yeah, so from Coastal Basin, that's the question. That's kind of the next place that we're going to look, right? So where do we like to start with trade ideas? And the answer really is this high ROR puts without earnings scan that we run. So if we run this right here, this is what we posted to our website, Hourglass-Trader. We posted the results from this earlier today. And there you have it, right? A lot of names on here. And, the one caveat to this, as we pointed out a little bit earlier, is the fact that this does get affected by after hours movement, right? So OCGN had a pretty big jump. So this ROR number isn't entirely reflective of what the actual ROR on those puts is going to be. But, typically as we go down here, we go through the list, we cut through these because a lot of them, while it is fun to look at the big ROR numbers, a lot of these are not the greatest trade ideas in the world, right? So we've got OCGN. We know that one's a little bit of a, flawed result, but it's also a biotech stock, and we like to generally stay away from biotech stocks. And that same logic applies to NVAX, SAVA, and those take up a lot of these, right? LABU. A lot of these are biotech stocks or Chinese stocks that we see right here with FUTU. I think we'll see DIDI a little bit further down. DWAC is a SPAC that's way, way up there. And what I've really liked doing lately on these scanners is we know that we really want to just target anything in excess of a 1% ROR. And we know that if we look at the top of the scanner, while there can be some fun trades from time to time, you'll see things like, I think Robinhood was up here at one point. And that's why I chose to enter into it when we did. There we go. Robinhood right here with the 19 strike puts. So you'll see Robinhood, you'll see that's a 4.91% ROR, and you type in Robinhood, but you don't always need to sell that 4.91% ROR option. If you see that there's 4.91% ROR at the money, you know that you could probably go a few strikes out and still get that 1% ROR number. And that's the case right here, right? The 17 strike puts are offering a 1.46% return. And that's typically over a 5-day period. But one really, really important point to make is the fact that, what was I going to say? The fact that the upcoming week in the market is only 4 days because the market is going to be closed Friday in observation of Christmas. So these are really, really good numbers for what is just now a 4-day period for the upcoming week. And we love these stock market holidays because I typically find in practice that the amount of premium that is shaved off for the one fewer day in the week really isn't representative of a full day of premium. So there's some super, super good value. So I am a fan of Robinhood. Let me pull up my little notes thing off to the side on my other monitors because I did think I pulled that one on there. Okay, Robinhood, the 17 strike puts, while I would classify these as quote unquote, premium chasing, they're not the safest trade in the world, right? Because Robinhood, similar setup to a lot of what we've been looking at throughout the rest of the night, right? It's fallen off. We don't really know exactly where it's going to stop, but there is a little bit of precedent for a bounce when we look back to Friday, and it bounced off of 17 pretty sharply. So I am a fan of potentially jumping into the 17 strike puts, which should offer, even if it offers less than 24 cents at open tomorrow morning, it should still be above a 1% ROR. And if we look at this right here, this normally would be, let's see, $1,700. You don't get a ton of margin help. You get a little bit of help from margin, but not levering yourself up with margin isn't the worst thing in the world. It's never the worst thing to sell things fully cash secured, especially when the market's looking as shaky as it is, as we see futures inching towards a minus 1% figure overnight. So that's one that I have on the list for the upcoming week. Robinhood, that comes straight from the scanner, that 17 strike put, and it's one where we see it come up on the scanner, but we say, hey, I don't need to sell the 4.91. I could go further out of the money, give myself a bigger cushion, and still get that 1% ROR that we like to target. Another one that's decent, and I talked about this a little bit earlier, the fact that we rolled it, into the following week is going to be Open Door. And if I could actually type this in right here. There we go. So we've got Open Door, 13 strike put. We sold these for 20 cents, so we got a little bit greater than a 1.36% ROR. But what we were able to do, same idea, right? We just want greater than a 1% ROR. Selling a 13 strike put is going to accomplish that with a 1.36% ROR as of market close on Friday. And if we go to the chart, we saw Robinhood had a decent bounce off of 17. We are now going to see that, Open had a decent bounce, went a little bit below 13, but it bounced off really, really nicely. So that was one that we liked right there as well. Open Door, 13 strike puts. And, continuing the idea of the fact that we are in trades that we are in because we like them, Fubo also has some awesome opportunity. You'll notice it bounced off of 15. There's some really, really similar action on a lot of these stocks that we're looking at, but there was the bounce off of 15 on Fubo on Friday. If we look back at that 15, which we could potentially perceive as a level of support, there you go, 1.45% ROR. The Fubo 15 strike puts expiring December 23rd, looking very, very nice as well. And if we go to that chart, we zoom it back out to the 180 day. Another one that has really fallen off a cliff. So RSI lately has been begging for a rebound. We see a little bit of support right around these 16 and 17 levels, which is why we started playing it around this level. But, beyond that, there was a 14.25 low, and then it quickly bounced back up off of that. This is one where it might be a little bit helpful to look at the 3-year chart because below 14, I think the next level is right around this 1250 area. But regardless, if you get in with the 15 this week, that's going to give you a 1480-ish basis, and that's going to be perfectly manageable if it does decide to go back down to 12. This is what I'm perfectly happy with long-term as well, right? We've seen the potential. We've seen this thing trade mid to high 20s, even low 30s at some point. So I think getting in on it near the $15, $16 price level is going to be a bargain, especially with the deal that they have for the upcoming FIFA World Cup next summer, where I think they're one of the lead partners for streaming for that. So I think there's going to be a lot of buzz for Fubo in that area in the upcoming months, and maybe 5-6-ish months, because I guess that's how far away we are from next summer. But long story short, never sell options on stocks that you don't like. I like Fubo at this price. Up at mid-high 20s and low 30s, I didn't love it, and this is exactly why. We're kind of seeing that play out. So I'm staying away from it up there, getting in down here, and that lines up with a nice area of support that we saw April, May earlier this year. Love the numbers on it. Next one, we've got a question from HYPRZ in the YouTube chat saying AMC. We did play AMC for the first time this past week when it had the big initial drop right there. So let me type in AMC. There we go. The 20 strike put, there you go. That gets you right around that 1% ROR number. So that's a very interesting point. Great question. But, to the idea of mean reversion, things going up must come back down. It was up 19% on Friday. So I'm expecting it at least a little bit in the short term to pull back a bit, right? And if we go back to that 3-year chart, I think this is an important point to make too. There's still a lot of downside here. I could definitely see this thing being at about 10, 11, 12 bucks a share. A few months from now. So that's something we definitely want to be wary of. But on a week-to-week basis, if we wait for the big red days, like we did with the big red candle right here, we could kind of bottom feed a little bit lower. But the idea with entry into the riskier stocks like this is we don't want to enter on the green days. We want to wait for the big red days. And that's what we saw right here when we made our initial entry into the puts that we sold last week. But again, don't follow the green candles, follow the red candles. I love the premium that we see right here. That's pretty far out of the money. But at the same time, there's almost inevitably going to be another day for AMC where there's a big red candle. Let's keep it on the watch list. Let's wait for that. And then let's pounce at the opportunities when we see that happen. And there you go. Futures taking over minus 1%. So we could see some good deals tomorrow morning when the market opens. There we go. We've got P-Dog 1967 is loving Fubo, good streaming service for sports fans. And if P-Dog's on board, I'm on board too. But let's flip back here. Let me actually make a tab in here. And I guess you guys can probably watch this live. We're going to call this one the HT giveaway tab. And I need to actually start putting some of these names in. There we go. So I'm going to call this the number. I'm going to call this the username. And bear with me here as I pull these entries back up and type them in really quickly. So if you need to take a break, this is probably a decent time. And that is predictably going to disappear when I click on Chrome. So I'm going to have to pull that to my other monitor really quickly. So there we go. We've got Rich_Wheel. Oops, there we go. Rich_. I am having the hardest time typing right now. Rich_Wheel. We're going to have, I'm just going to type in Sierra because I know that's Sierra. We've got VS_Hourglass. We've got KB. We've got Masked Mage. We've got Coastal Bassin. And I'm completely missing all the keys I'm trying to hit right now. This is great. We've got Cash. We've got JJP. Scroll further down here. We've got SM1LE4 Me Too. I can just probably pronounce that as small for Me Too. We've got Rakesh. We've got, let's see, P-Dog 1967. There we go. So far, there we go. We've got one. We have 11 entries into the drawing so far that we are going to have at the end of the stream. But let's talk a little bit more about some trades that we have for the upcoming week before we get to that. So if I go back to my cheat sheet really quickly, a lot of what we were looking at right here. So I'll just pull this on so everyone can see what I'm looking at. I don't sound like an insane person right here. We talked about Hood. We talked about Open. I think those are really good entry opportunities. Fubo is also one that we could throw on here. I didn't put it on there previously. I don't know why I just went bold and underline there, but Fubo, 15 strike puts, those looked good. And I'll screen cap this and share this with the Discord server after the stream, so you'll have a nice little cheat sheet for the upcoming week. But SoFi, this one's a little bit riskier. Let's talk about this one, the 14 strike puts right here. Because we've seen, similarly to the open doors, similarly to the Robinhood setup, we've seen these stocks dip and then bounce off of these levels, right? And it bounced off of 14-ish, right? It had that 1366 low, but what scares me a little bit about this one, it's a former SPAC. Below 14, I don't really know where this thing is stopping other than maybe 1250-ish. So there's a little bit of potential downside that could hit pretty quickly if it does break down through 14. However, if you do want to get in on the 14 strike puts, you're gonna do yourself, I guess, one better than the typical 1% ROR that we'd like to look for. You're gonna see 2.23% ROR, and that's a really, really nice number. Not a bad place to be with that 1370-ish break-even price, which falls right around here on the chart. So that's a decent one. I think it's a little bit riskier. You could drop down to 13. About 0.81% ROR is just south of the 1% ROR that we typically like to go for. But nonetheless, I think it's a decent stock, decent company, one that you're not going to get crushed if you as long as you're cautious with your initial position sizing and leave yourself more room to double down if it does fall down to that 12-ish level. I think that's one you're going to be okay with in the long run. And again, let me see if I could put a little graphic on the. Here we go. I'm going to put a text box on the stream. Let's see if this works. Type. Bear with me here. Technical challenge right here. Okay, I think this is going to work. Okay, it probably looks enormous on the screen right now. This is probably so embarrassing. We're going to make this a lot smaller. Bear with me as I drag the text box embarrassingly around here. Type HT in the chat to enter the HT giveaway. We're going to put that right on the bottom right here. Ish. Yeah, close enough. All right. I think that should work. I think that should be out of the way of the screen. I think we're looking good. So again, if you are new on the stream, type HT into the chat and you will be entered into our HT giveaway at the end of the stream for our HT Yeti tumbler. Congratulations if you are the future winner of that. But there you go. So we've got 11 entries. We've got a 12th entry. We've got George Park 63. Congratulations, you are entry number 12 as we continue to talk about what we've got for the upcoming week here, right? So we've covered these four. I think these are some decent trades, but again, we've got these stratified under the premium chasing umbrella right here, right? So if you go to our profit tracker, we have things divided into let's go over here. We have things divided into safer plays and premium chasing. The safer plays have done us pretty well this year. They've taken home about 25K, and that's not to say that premium chasing plays are bad. They're just a little bit more volatile, so we could end up seeing ourselves with a, one of these trade breakout tabs if it moves against us, so we need to manage the position. But they've both performed similarly well, so there's not one that's better than another. Like, we just like to diversify between different stocks, diversify between things that we know are safer and things that we know are more dangerous. It's just all part of that position portfolio diversity. But back to the notes, let's talk about some that we think are a little bit safer and going with the theme of, trades that we're already in because we think that we're good and they're good for entry if you're not already in on those. Palantir, probably top of the list for that, right? Back down to 1906. We took a look at the chart and talked about this one, extensively early as evidenced by the red lines that we have on the chart right here. But it's started to find a little bit of a bottom. We didn't know if it was going to level out at 23. We didn't know if it was going to level out at 20. It's broken through both of those potential support levels. But now we've got some decent evidence that it's starting to level off at about 18. So what does that mean? Anything around that 18 strike is probably a decent strike to sell some options on. So the 18 strike right now is offering a 0.95% return on risk, which is, pretty much 1% ROR on a weekly basis. That should be a solid trade for the upcoming week. So I've got that put into the notes tab right there. 18 strike puts expiring on Thursday. Again, Thursday, markets closed on Friday, but the 18 strike puts expiring Thursday, December 23rd, I think are a pretty solid option if you're looking for initiating a Palantir trade. If you're already in on our Palantir trade, just hang in there. I'm confident we'll get it back at some point, but it's just going to take a few weeks. But there you go. You could also do the 18.5s, right? Because we think about, if you really are convinced that there's going to be an 18 base here, you don't just need to sell the 18 strike. You could sell something that gets your break even near 18 as opposed to having your max profit near 18. And the 18.5 strike puts offer roughly 30-ish cents of premium. That would put your break even at 18.20, which again, from 1906, there's only a 60-ish cent market maker implied move right here, which would imply that the low end of the range for the upcoming week is 1850, which, ta-da, right on the number right there. So that's an interesting one if you want to try to bite off a little more and go for a 1.56% ROR on the week as opposed to just going south of 1%. But again, anything with pounds here in that 18-ish range, I think is a decent entry point. The next, similarly continuing that theme of trades that we are in on and think are decent opportunities for the upcoming week, DraftKings is a good one still if you want to initiate a position. We have some evidence here that we might have found a bottom, hopefully in the mid-20s range, that we could see it bounce back up into the low 30s so that hopefully we can recoup the losses that we're currently experiencing on that position. But if you're not already in on that position with us, there's some really, really nice ROR potential, even down at like 26, right? So you know that 26 is about 260 below the current price of 28.67. In plain English, that basically means that you can afford to have DraftKings drop 10% this upcoming week, and you're still going to make money on the 26 strike puts. There we go. We've got Jules typing HT into the chat. Welcome to the giveaway. Where's the giveaway tab? There we go. We've got entry number 13 into the giveaway is Jules. All right. Back to this. But yeah, DraftKings, if you take a look at where that 26 strike lines up, it did bounce off of 25.8. That lines up pretty nicely with that 26 strike put. And another additional advantage of this is the fact that if you wanted to sell one of these, we know that normally that would take about $2,600 of collateral, but if you have margin buying power privileges, you get some serious leverage on this. It would only take $300 of buying power. So we are very, very happy with DraftKings as a potential entry. But again, we see features are down 1%. We don't know what these things are going to look like, so we may need to adjust strikes. So we get the question a lot because, there's only so much you could come up with on a Sunday night before the market opens, especially if prices are going to be different as they appear that they may be on Monday morning. But again, the general idea is that, while we're recommending a 26 strike right now because that's a 1% ROR, if DraftKings opens down 3% on Monday morning, you're probably not going to want to sell a 26 strike put. You're going to want to look back at this and say, okay, where is the 1% ROR now? Is that 25? Is that 24? But that's the kind of idea that you should have as you're looking at potentially jumping into these trades at adjusted strikes due to differences in price. So let's see. Here we go. We've got Sleepy Condor saying he snoozed. That makes sense. What do you do here? And can you guys see the text on the bottom of the screen here? Type HT into the chat to enter the HT giveaway. Because, I kind of did that on the fly. I don't know if it actually works and you guys can see it on the stream. So, a little confirmation would be nice here. But, Sleepy Condor, to your question, if you would like to enter the HT live stream giveaway, the very first giveaway of all time, and potentially be the proud owner of a new Yeti mug with the HT logo on it, just type HT into the chat and you will be entered into the live stream drawing that we are going to have at the end of the stream, which, is kind of coming up pretty soon here. But back to the notes, let's talk a little bit further through some of these safer HT wheel trades as I take a quick sip of my water. All right, there we go. And another cool announcement I guess we've got is we're a little under a month away from me introducing the webcam into my stream. So I'll be sitting right around here and looking at you guys as I talk instead of just sitting in my bedroom and speaking to nothing at all. So there we go. I love the confirmation we got in the chat. And what I love about this is I think the stream lags like 30-ish%. Not 30-ish%, like 30 seconds or so. So I'll ask questions and then kind of awkwardly sit here and talk in circles until I get answers. But I've got my answers. We're good. Sleepy Condor has typed HT into the chat. So congratulations to entry number 14, Sleepy Condor. There we go. Okay, we have 14 entries. Back to the notes. What are we going to talk about? The next one on the safer HT wheel trades is going to be Boeing. This is one that came across on the watch list as opposed to the scanner, but one where, I saw the price was $192. The reason that we like to have watch lists is the fact that, even if we're not going to trade something on a day-to-day, week-to-week, month-to-month basis, having watch lists, consistently looking at them and reviewing them and seeing what's on them allows you to get familiar with typical prices of a stock. So when I saw Boeing trading below 200, I know that, hey, that looks a little bit out of the ordinary. I'm used to this thing being in the low 200s, as evidenced by what we can see here on the 180-day chart. So the next step from that observation is the fact that, hey, it's probably a little bit oversold. Let's see if we could sell some options on it. Let's see if we could target that 1% ROR, and let's try to figure out where we think this thing might bounce from. So if we'd seen this a little bit earlier back in the end of November when it first breached that 200 mark, the numbers line up pretty well. And this is why we love the idea of support and resistance in our technical analysis, right? Because we could have taken a look at this 180-day chart. We could have said, hey, back in January of 2021, excuse me, this is a 1-year chart, but we could have said, hey, back in January of 2021, this thing bounced pretty cleanly off the 190-ish level. So we could have conceivably thought that might be the same for what happened back in the beginning of December when this dipped. And we see that while it did drop down below that to about 188, there was a really nice bounce off of that level. And again, speaks to why we like RSI so much, right? The RSI got blue. That means it got below 30. That means it's very oversold. And from that point in time, it jumped right back up to about 210. But now since then, it's dropped back down below 200. It's at 192 to the point that Coastal Basin's making. I think even if you're a long-term investor, I think it's a great addition to a portfolio. But again, we could extend that logic to say, hey, we want to sell puts on stocks that we're happy with owning. I would not hate getting assigned Boeing at around the 190 level, especially if we look in the context of, the last 3 years. It was trading around 350 before the COVID crash. I mean, this is a stock that's heavily dependent upon U.S. defense, like government defense contracts. I know they're more popularly known for a lot of their plane manufacturing, but there is a vested interest in the U.S. government, keeping this company propped up for everything that it supplies to the government. So that's another thing that I like about the stock. Now below 190, where could this thing settle? Could it go down to 170-ish? I think that could be it. I think maybe 185 might be a decent point of support, but the point being, it's below 200. We think that's a good value. And if we go look at this little 1-year chart that we were looking at a second ago, there you have it. This 190 level should be decent support. So let's take it what we can, oh, good Lord, none of that was English. Let's take a look at what we can sell for the upcoming week in that area. And you can see right there at 190, you get a 1.27% ROR. And while that 190 might be a little bit above, the low of 187.88, we could take a look at the premium and not just think about our max profit point, but think about our break-even price, right? So if we sold a 190 strike put, we got 225 of premium on that. Our break-even price would be 187.75. So if we go to the chart, we'll see 187.75 is below the low. So we could say, hey, while this 190 strike might not have a max profit below the low, the break-even price is below the low. So that's a pretty solid investment from a technical analysis perspective and taking a look at where we could expect this thing to bottom out. And now Boeing is strongly correlated to the S&P 500, so we could see this thing take an even further dip. And if that further dip allows us to get a 1% ROR at 187.5 or 185, I think that's money right there. Now, I'm not going to sell a ton of these, obviously, because it takes about $18,000 a piece to sell one of these fully cash secured. And, if you have a smaller account, that may be a little bit cost prohibitive. So, a little bit frustrating that you may not be able to get into this one. But if you do have an account that lets you get into this and still have proper diversity throughout the rest of your account, I think this is a pretty good trade opportunity, and one where we like to talk about using a little bit of margin to ease up on the buying power side of things. While it normally would take 18,000, it only takes about 3,000 of buying power with margin, so you get a pretty decent little discount right there. So it won't tie up too much of your portfolio for those of you who are using margin. But again, if you are using margin, always be wary of the amount of positions you're taking on from a fully cash secured perspective, right? And that's where we have this margin, calculator out to the right of our profit tracker, because we could take a look at our buying power and see, we've used less than half of our buying power. But if we extend and fully analyze our positions and understand cash secured, how large those positions are, we'll see that we're using actually more money than we have. So we're slightly using some of our margin, and that's okay, because I think margin is a very useful tool in investing, but we just want to make sure this number doesn't get up to 200, 300, and we're like super, super leveraged in the market, because that is, while you can have some very, very green days like that, it's also a very easy way to blow up your account. So we try to avoid that. But again, circling back, Boeing 187.5 as it stands right now looks pretty solid. We can see futures are pretty red, so it might open a little bit lower. And in that case, again, just try to find that 1% ROR somewhere in the option chain. But I think that's a pretty solid one that we could tab under a safer trade for the reasons that we discussed when we took a look at this chart, where it's been historically, it's a little bit oversold right now. And, I think it's in a decent spot to potentially pick up. And if we get a sign, not a big deal. It's Boeing, right? It's a pretty solid stock. So there we go. We've got a couple more people that we need to add to our giveaway right here. We've got D Milla. What's going on, D Milla? Thanks for checking into the chat. There we go. DMILLA1. We've got J Gold 1235. Welcome, J Gold. And we now have 16 people in the giveaway as we talk about a few more things before we have the actual giveaway for an HT Yeti tumbler. So let's circle back to the notes to make sure I hit on everything. And again, one last safer trade that I have right here under the HT wheel is Beyond. A lot of you who are in our Discord server are probably pretty familiar with that one because we've played it a little bit in the past few weeks. This big decrease. But 6206 is the low right here. If we look back in that area-ish, you can see that the 62, 63 strike puts are getting you into that range where you can get 1% ROR. 63 strike put for 60, 70-ish cents of premium gives you a 62.30 break even. That lines up almost dead even with the low on the stock. So that's another one where it looks decent, but to the point we made with AMC earlier, where we don't really want to enter into the stock because it's run up so much. We may want to wait for a red day on Beyond because this thing was up 4.67%. Now, that's not quite the plus 20% that we saw with AMC, but, 4.67% is still a pretty significant green day in the market. So we're going to want to hang tight, keep it on the watch list, wait for a red day, and then potentially come back to this option chain, see where we can find 1% ROR, and at that point, jump into it. And if we can't, because the market's going up, well, that's good news for the trades that we already have in play. But, if the market's pulling back, we have some decent buying power on the sidelines right now, and that's exactly what it's for, to enter into new positions as the market pulls back. So if we go back to our notes, sticking to the script, those are all the HT wheel plays that we have right there. It's looking pretty solid. And now let's talk about earnings. We have Nike, we have Micron, we have Rite Aid, and we have Blackberry, right? So we didn't see a ton on the scanner, right? Because a lot of the scanner was dominated by a lot of I didn't even hit the scanner tab, but a lot of the scanner was dominated by a lot of these riskier biotech type trades, and there weren't a lot of things that were popping off the page as something that's like, this is a must trade, this is great value. But earnings are another place where we don't see great value on the scanner. We can manufacture premium because there's always areas of the market that have premium. You just have to go find them, and earnings are a great example of that. So I guess maybe to take a little bit bigger of a step back here, not a ton of earnings because we only have a 4-day week in the market coming up here. And if I click over to the earnings channel that we have in our Discord server, which again, you could join, go to www.hourglass-trader.com. You'll have the link to join here. It's free to join the Discord server and all these channels, but HT Premium gets you all of these bonuses. But for the upcoming week, this is the extent, right? And a lot of these aren't going to have a ton of volume, but I figured it'd be worth it just for informational purposes. If you do see a company on here that you're interested in playing, but the ones I picked out for sake of discussion tonight are going to be Micron, Nike, Rite Aid, and I think Blackberry was the last one that I picked out right there. Yeah, Nike, Micron, Rite Aid, and Blackberry. So let's talk about those. Let me drag this back off screen. There we go. And again, if you are lurking in the chat and you want to join the HT giveaway, just type HT into the chat and you are going to be all entered to win your very own Hourglass Trader Yeti tumbler. So let's talk about Nike, which is the first one that we have on the list. And let's go through our typical earnings analysis that we like to run on these things from an option selling perspective. So we see that Nike's trading at 161.36. And what might be a little bit easier is if we go to this little tool that I put in the top of the profit tracker. So there we go. We could type in Nike, ticker NKE. It's going to fetch the price 161.36. If we click back to Thinkorswim, We're going to use the MMM, and I talked about this briefly a second ago. It's the market maker move. And what is that, this yellow number up here? Because we know about the expected move, right? That's the expected move that we see right here, which is based off the implied volatility in the options chain, which, when I hold my mouse over it, tells me implied volatility. So the implied volatility that's priced into the options suggests that, there's going to be a plus or minus $12.09 move right here. The market maker move is what Thinkorswim describes as a proprietary formula that they use to predict the implied move. And they kind of suggest that it's a little bit more in line with what market makers are using, a little bit more accurate historically. So this is the number that we're going to be using for our analysis. And there we go. We have another entry into the HT giveaway. We have entry number 17. Congratulations to XWLIIX. I'm not even going to try to pronounce that. We're just going to leave it right there after I spelled it. But congratulations, entry number 17. Back to Nike, right? So we have an 1145 market maker move. And the idea here, when comparing that to 1209, you'll see that, the options are priced based on a 1209 move, but, more realistically, it's only going to move 1145. The bigger the gap between the realistic move and the implied volatility move, the greater the advantage to option sellers, right? Because that suggests that there's more premium in the options than the reality of the situation actually is. So you'll be able to sell more than the move actually implies. And that's good for us, right? We want to see a gap between these two. And while we don't see that right here, that's not to say, stay out of the trade because of that. It's just to say, if you are comparing these in the future when you analyze stocks, a big gap in these numbers is an advantage conceivably to the option sellers. But, circling way back, because I like to go off on little tangents here while we're streaming, this is the number we're going to use for the implied move, $11.46. So if we click back to the weekly tracker, 11.46. Oh, there we go. It is Will typed out weird. So congratulations, entry number 17. We're going with Will. That's a little bit easier to pronounce. Thank you. But that would suggest, right, a 7% implied move. So the idea here is if you go 7% up, 7% down, that's kind of the extent of the move. And that's going to be between 149.90 and 172.82. So what we'd like to do is, knock this out right here, remove this drawing. Let me make sure I don't have any other drawings on here. There you go. Remove that drawing as well. Boom. 149.90. We're going to plot the low end of the range right there. 149, and then we'll call it. That's close enough. And then the upper end of the expected range is 172.82. And that's going to be right about there. So let's extend these to the left. We're taking a look again at the 180-day chart to start this off. So, it's off the highs at 180, but also 180 days ago, even back in June of this year, this thing was at 128 before it took a pretty big jump. What's a little bit tough about this one is that typically you like to line up the upper end of the range and the lower end of the range with areas of resistance and support respectively. You could see a little bit of resistance around the top end of the range back in August, but it broke through that relatively recently back in November a couple of times. So while the implied move suggests an upper end of the range at about 172, I wouldn't be surprised to see if it runs up here that would actually hit this 177 or 178 area. So from that perspective, I don't think selling, a bearish call position is going to be safe on this one. But let's look at the other side of it, right? If we wanted to sell around 150, it looks like the support, similarly on the call side of things, it's a little bit outside of the lower end of that range. So it's at 145. So that's not necessarily the safest thing in the world, but knowing what we know, let's see what the option premium at 145 looks like. It's interesting because, one, we have this area of the lower end of the expected move protecting us, and two, we have support at 145 protecting us. So we kind of have two lines of defense against potentially selling a 145 strike put. But let's see what the ROR on that's looking like. 0.65. I don't think that's anything worth getting out of bed for. If that were closer to 1% ROR, I think that's something we would jump on. But I just don't think the way that the expected move here lines up with support and resistance, combined with the ROR that we see at that level of support on the low end, I just don't like the way that that one lines up. So Nike is not going to be one that I'll be taking a look at. So, big strike through on that one. I don't really know how to do a strike through, to be honest with you. So we could just turn it red. There you go. Not good. But let's take a look at Micron. And again, another important thing to consider with earnings is what day of the week these earnings are on, right? Because we know that we have a huge implied volatility crush after an earnings event, but also selling weekly options. We also have some theta decay during the week. And I love to sell options closer to expiry. I love to play earnings that are closer to expiry as possible, right? So in a normal week, I really do try to avoid Monday and Tuesday. But since next week is a short week, Tuesday is technically what Wednesday would be on a normal week since the market closes on Friday. But again, I'm not in love with the Monday play. But if we see numbers that work, the numbers work, and then we're going to go for it. But I do like the back end. So, the Rite Aid, the Blackberry, I think are going to be a little bit more appealing to me. But let's get through those. And then we are going to get to our HT live drawing. So again, if you're watching the stream, if you're new on here, type HT to the chat if you would like to enter into our HT drawing. And you'll be entered into the giveaway. So Micron, they report similarly to Nike. They report Monday after earnings. If we go back to the little thing that we're making right here, MU's the ticker on that. It's going to fetch the price. It closed at $83 on the dot Friday at close. So there you go, 83 on the dot, 6.36. A little bit of a delta here, right, between 6.36 and 7.11. So seemingly more advantageous for an option seller as opposed to something that we looked at like Nike, with the difference between the MMM and the implied move right here. But let's, again, go through the process. Let's take a look at where these numbers line up and see if this truly is something where the numbers look decently. So 6.36 is going to be the implied move right there. 6.36. That's going to give us a 7.66 implied, 7.66% that is, implied move, leading to a range of 76.64, which we're going to plot on here. Oops, let's get this drawing out of here. 76.64. Close enough. And the high end of the range right there is going to be 89.36. Okay, let's extend these both out to the left to see what we can see. And off the bat, things are looking a little bit better than what we saw with Nike, right? Specifically looking at the top end of the range here, when we looked at Nike, we saw that it broke through the top end of the range. With Micron here, what we're seeing is that it falls just short of the top end of the range. So you've got one thing right here, which is the fact that, you're keeping it below the upper end of the range. Second thing is you've got some levels of resistance right around this 86, 87-ish level right here, which if they do have a good earnings, that should conceivably protect you for an initial upward move before getting to 90. And again, that lines up decently with some resistance that we saw back in April of this year. Let's talk about lower end of the range. I don't like the fact that it broke below down to about 75, and even more so the fact that it was trading at about $65 a share back in October. I think a lot of the earnings recently have not gone too well and have revealed a lot of supply chain issues. So I think this actually might be one where I think setting up a bearish trade to play it back down post earnings might be a decent bit of an idea, right? Because you've got this 86, 87 support level, and you've got the numbers telling you that 90 is probably the top end of the range. So let's take a look at what's going on with the option premium at about that 90 level. So for this, we never want to sell naked calls, right? It's okay to sell cash secured puts if we want to make a bullish position on a trade, but we should never sell naked calls because that is a really good way to just absolutely crush us. And if we widen out the legs on this a little bit, sell a 90.95, it's not the greatest return in the world, right? You get a $500 return off maybe $5,000 of risk. It's a little bit over 10%, but we like to view risk differently on spreads. I just don't know if I'm thrilled about the potential for that because, again, if you look back to April, it's run up to 96. There's definitely some precedent for it being there. Let's go back to about a year. And what's interesting when we back this thing up to a year is you start to see a little bit more support back in May, back in June, right around this 76 level, which could give you a little bit more confidence in that level as well. So if you could play something 76 where, keeping that short-term downside of 65 in mind, and if we go back to the 3-year, it's historically been a lot lower. Seeing this run-up right here between, September of 2020 peaking in April of 2021, I don't know if I'm in love with keeping a bullish position here because it's still kind of overcooked from, a 3-year perspective, and the market's looking a little bit shaky as we've talked about. So I think a bearish position is the trade right here. If we move the strike in a little bit, I think we can, a little bit better return, I believe. But at the same time, don't know if I have enough conviction to make that trade, especially being that early in the week. So I think this might be one I hold off on. If you do want to make a trade on this, you could pull it back. I think this is the one that I would go in on. But I have had a history of, if you're not in love with the trade, move on. It's easy to look at something, analyze it for 5 minutes, and convince yourself that there's, a gun to your head and you have to hit the trade button. But if you're not in love with it, you don't need to make the trade, right? We've got our scanner right here with over 1,000 different options on there. There's going to be something out there that you could find and fall in love with and make money on. So we're going to leave that one alone. And, maybe I think I'm going to highlight this one yellow. I'm kind of so on it. I'm not in love with it, so I'm not going to make it. But I think if you did go with that 90-92 call credit spread to, initiate a bearish position, I don't think it's a bad trade. I think the numbers, add up to support the idea behind that move. And while we were talking about that, we've got 2 new entries into the HT giveaway. There we go. Congratulations, entries 18 and 19. We've got Mahir. We've got West Wind Winter. West Wind Winter, I think, is an OG viewer. Welcome back. Welcome back to the chat. But back to the rest of our earnings analysis. We've got 2 more tickers that we're going to want to talk about. We've got Rite Aid. We've got Blackberry. I talked about how I like playing these things later in the week. But for purposes of, when they actually occur, Monday afternoon is basically the same as Tuesday morning, because they occur in the time between the market closing on Monday afternoon and opening again on Tuesday morning. So as far as their positioning in the week, don't let the fact that this is Tuesday and this is Monday fool you. These are basically all at the same time frame. But let's take a look at Rite Aid, because interestingly enough, it has a really, really big implied move, which implies some serious potential for option sellers out there. So we're going to pull the chart up. I don't want to look at the 3 year. I'm going to pull up start with the 180 day. We're going to go back here. We're going to type in Rite Aid, RAD. That's going to fetch the price. 12.05. It closed on Friday. We've got a 1.83 MMM. We're going to type that in to the profit tracker as well. 1.83. And there you go. There's that 15.19% implied move for the upcoming week, and that sticks you between 10.22 and 13.88. So let's go to 10.22 on the chart right here, and I'm going to zoom in to plot it, because that'll make it a little bit more accurate. 10.22, okay. And the high end of the range right there is going to be 13.88. 13.88. There you go. We're going to remove this. We're going to extend both of these to the left. And now we're going to zoom back out to the 180 day to get the big picture of what's going on here. So this one, the bullish position is looking interesting, right? Because you already see that there was a bounce back on the beginning of December at about 11.50. So conceivably, you have some sort of support there. If we go to the Analyze tab, we could pop in earnings right here, type in RAD, and we can get a little bit of an idea of what the moves have looked like historically. Because if you look at this chart right here, there's a pretty big red candle back when they reported back in June of this year. So there you go. I mean, you see some pretty big gaps down. There's that big red candle that we were looking at, going from 19-ish down to 17.5. But we've also seen some decent moves up. There's another big gap down here. So historically, there's some decently large moves. But again, it can be a large move provided if you're selling puts, right? It can be a large move upwards and you'll sleep like a baby the next day. Really, all you're betting on by selling puts here is that it's not going to be a big move downwards. And that's really happened 1, 2, 3, 4 times out of the last 8 earnings. So, are you playing with 50-50 odds there? Maybe, but let's see what kind of ROR we can get on the low end of the range, which is this 10.24 level, where I probably want to sell around $10 a piece. We've got Todd asking if we could post our weekly recaps in Discord so I can see how we've done without going to the YouTube videos. Absolutely you can. Absolutely I can. I've gotten a little bit busy on that side of things, so I haven't been able to keep up with it as I would have liked. But also, if you are in the Discord and you want to see how we've been doing, you can click over. Hold on. You can click over to the Profit Tracker channel, and the link in here, right here, the HT Profit Tracker, it takes you right to our spreadsheet, and you could have a live look at how we're doing that week and how we've done historically in the market. So that's where the link is right there. But again, I will, to that point, try to update a little bit better about what has been going on with our performance So there we go, there we go, there we go. Back to Rite Aid. You know, what we were thinking about here was the 10 strike, right? Because we don't want to get too greedy here. If we go back to 180 day, I mean, I really want a better idea of where a potential support can be. So let's go to the 1 year. Again, we don't see anything around 10. Let's go to the 3 year. And there you go. This is where we start to see a little bit of a potential base here. So back in, October of 2020, it bounced off of this low $9-ish level. 504 in 2019 after before. What's going on here? Where's COVID? COVID's right here ish. Really unaffected by COVID. That's surprising that we're not seeing that on the chart. But either way, I think 9-ish is the potential downside if we see a really bad earnings right here. So I want to see what's going on at that 10 level. And there you go. We can hit these ROR numbers that we like to see so much, right? Even at 10, we get a 2.56% ROR. Even at 9.5, we get a 1.55, and even at 9, we get a 1.24% ROR. Now these are a little bit tougher, right? Because as you get cheaper and cheaper, and you start to sell options for less than 10 cents a piece, the commission actually starts to become a little bit of a consideration because it takes a little bit of a chunk out of the profits right there. But that's not too big of a deal, right? We know that if we sell 10 strike puts, that's basically going to give us a 20% plus cushion and keep us outside of the expected move. So that $10 strike minus 25 cents of premium is going to stick us with about a $9.75 break-even price, which is, we're going to have to zoom in on here to plot it again, but $9.75 break-even price is going to be right around here. There we go, dead on it this time. So let's extend that to the left, zoom back out to that 1 year chart, zoom back out to the 3 year chart because that's what we have to do to go find that support again. And this bottom red line here doesn't look like too bad of a place to own the stock, right? You see it as a point of resistance back in July of 2019. You see it as a point of support back in March of 2020, and another area-ish of support in October of 2020. So I actually really like the precedent around this price level. And I think these 10 strike puts are a really solid idea. Let's see if we get any help. We do get some serious help on the margin side of things as well. So, normally you would take, and that's for selling 10 of these, maybe to put this in a more relatable and understandable example, selling one of these would take $977 to sell fully cash secured. It would only take $275 of buying power, though, if you elected to use margin. Again, being careful not to completely over leverage yourself, but it is nice to have some buying power free from a flexibility perspective, and margin helps a lot right here with that. So I do like the 10 strike puts right here. I think that's a really nice price level. 2.56% ROR over a 4-day period is really, really nice. And we have like a 25% cushion to the downside. So unless they really, really tank earnings, we're going to make money on this one. And even if they do tank earnings, we want to be cautious to start with a smaller position. So start with maybe 10%, maybe not 10%, but less than 10% of your portfolio. That way, if they do tank, you could take advantage of the implied volatility off the drop, sell even more puts at inflated premiums, lower that break-even price, and then when the implied volatility starts to fall out of it as it finds a price to level off at, you'll have a decently averaged down price. So, I'm going to add that to the little notes list that we've got right here. I'm highlighting this thing green. Let's do it. Highlighting it in green, we're going to say that we're going to want to 10 strike puts for December. Those were weeklies, right? Yeah, these are weeklies. I think these are fantastic. Deadloof, welcome to the stream. We've got an entry into the giveaway. He's asking about what platform this is. This is TD Ameritrade's Think or Swim trading platform. Perfectly free to use if you have an account with TD Ameritrade, which is, I think, perfectly free to set up. But let's go back to the giveaway tab really quickly. I think I've got everyone. There we go. Everyone in here. Entry number 20 is going to be Deadloof. Congratulations. But back to the notes. We have one more earnings trade to talk about, and that is Blackberry. There we go. And they report Tuesday afternoon. And again, since next week is a 4-day week, that's the equivalent of Wednesday afternoon. And that's typically the window I like to look at. So I like what we're looking at right here, right? So we've got Blackberry trading at 9.17. And I already know that's a little bit down from where it typically trades, I guess, if we go to the 180-day chart. It's been hanging out in this $10 range for a while, dropped down to, looks like it hit $8.50, a week or two ago. So that's definitely some tangible downside right there, but let's go through the process right here, see what we can see, and let's see if the numbers add up to something that we like. So we're going to put BB in for Blackberry. That's going to fetch the price. 917 closing price. We go to the trade tab right here at 96-cent implied move for the upcoming week. 0.96. That is not how you type 0.96. There we go. Okay, 821 to 1013. So let's zoom in on the chart. Let's plot 821 to 1013. 1013's right there-ish. 831 is right here-ish. Okay, we're going to remove that drawing. We're going to extend both of these to the left as we have done for the previous three. And there we go. So let's zoom back out, see what we can see. And the first thing that we notice before we even zoom back out is the fact that the lower end of the range falls below the perceived level of support that Blackberry bounced off of just a few days ago. So that's positive for a potential bullish trade, backing out to 180 days. And back when it got down to 771 at the low, it did seemingly bounce near this level. I think 8 looks like a decent-ish level of support for Blackberry back in April. But, you know, the scarier thing with Blackberry is it's part of this AMC, part of the GameStop, part of the, so-called meme stocks, where if you go to the 3-year chart, you've got something that was trading at, $5-ish a share for a while. But, before the COVID crash, we did see some precedent back in the 9s. It traded a little bit in the 7s. So I don't think that's as big of a consideration, the drop potentially here on Blackberry, as compared to something like AMC, which, got trading up near 30 right now, and it was below $2 at the bottom. So not as severe downside right there. But again, going through this analysis, we've identified Blackberry as a decent opportunity. We've identified the $8 price level as a decent opportunity because it falls below the lower end of the range. And when we zoomed out to the 180-day chart, that's kind of the area that it started to bounce off back in April. So let's see if we can get any premium right here. And there you go. We've got 1.59% ROR on the 8 strike for the upcoming week. And I think that's, again, some pretty solid value, right? Anytime we can get above 1% ROR on a weekly basis, we like that. This is 1, below the lower end of the expected range that we've plotted right here with the red line, and 2, pretty much at this level of support that we've identified from April earlier this year. So I like the 8 strike. I think these are required. Okay, not fully cash secured. You get a little bit of margin help, but not a significant amount. But again, if you were looking at Boeing, you were looking at some of the stocks that we looked at earlier, like Nike or something like that, and you said, okay, those are a little bit cost prohibitive for me. Blackberry is going to be great for you. Rite Aid is going to be great for you because these are things that can be sold for less than $1,000 cash secured per contract. But I like the way that the 8 strike lines up, 1.59% ROR, numbers add up. But again, with how risky this one is, might be a good one to, if Rite Aid was a good one to limit your initial position size on, Blackberry is a fantastic one to limit your initial position size on because there's definitely some serious downside that we saw when we took a look at the 3-year chart on that one. So, let's go back to the notes page. Let's highlight this thing green and let's say, I like the idea of selling some 8 strike puts on these. So we're going to go 12/23 AP. Deadloof with the question in the chat. What is ROR? ROR is return on risk. No need to apologize for being new to trading. We all started in the exact same spot without knowing anything at all. So no stupid questions around here. ROR, return on risk, as Morph so helpfully pointed out in the chat. But it's basically the return that you get from selling options on a weekly basis, assuming max profit, which is what we see right here, a 1.59% ROR. And in plain English, what this means is you're going to get a 1.59% return in 4 days as long as it stays above 8. So you've got a pretty decent cushion from a percent perspective. But again, earnings are typically a pretty volatile event. Blackberry historically has been a decently volatile stock, but I like the way the numbers are adding up, and I think that's a decent one to take a look at for the upcoming week. But that gets us to the end of the earnings discussion. The 10-day trade for earnings is another strategy that we like to use from time to time, and that focuses on not earnings this week, but earnings in the following week. And I guess because it's the end of the year, some holidays going on, there really aren't any earnings in this window right here, so there's nothing to talk about right there. As far as IV reversion is concerned, CALT was one that kind of provided an opportunity this past week because you see this big spike up to 34.52, which then leveled out. We always like to sell options where, after the spike, we can get at least 1% ROR near the base that it was previously trading at. We weren't able to do that. I know we did have a couple people in our Discord server go up to 20, which, isn't the worst thing in the world, right? Because there is some precedent for it hanging out around there back on November 23rd. And that worked, which is, I think the exact comment I made to that trade idea was, I think it'll work, but it isn't quite the base. But those were both true, and they made money. But the idea, again, if we could take a look at some of these, and I don't know if these are going to illustrate it as well, because we were taking a look at the ones that expired last Friday, but let's see if we can, see the implied volatility drop off here on these 20 strike puts. So there you have it, right? Even after the big event, right? So this is, let me get these on the same timeline here. This is a 20-day chart. This is a 20-day chart. So this is the big, this is the 16th right here. I don't know why it's zoomed in on 2 days. That's interesting. Anyways, this is before the big announcement. So this is this day right here. And then after the big announcement, it spikes up in the morning. And here's the idea, right? The implied volatility, if we update the study right here, below the chart to I for implied volatility, we're going to see implied volatility falls off the face of the earth and just continues to level off throughout the rest of the day. And we'll see that even though we knew that CALT had a positive result and the stock was up a bunch, there was still a little bit of implied volatility left that needed to, fade off. And these things opened at about $2 per contract. And throughout the day, they ended up at about 150. So they lost about 25% of their value without really ever having that 20 strike in danger throughout the day. So that's kind of the idea of what we're looking at with these IV reversion trades. And obviously we've had some historically, which have, been a lot better, a lot easier to see. But this was a little, a slight potential IV reversion opportunity that popped up last week, but nothing too crazy to talk about there. We're going to try to keep our eyes peeled for those because especially when the market is a little bit rough like this, these implied volatility reversion trades are relatively disconnected from the overall market. So they're a great hedge against a potential crash in the market because, a lot of our long-term positions are held in things that are roughly correlated to the overall market. So if the market pulls back, we don't want every single trade that we're in on to be losing money. We definitely want to keep our eyes peeled for more of these IV reversion type opportunities. And there haven't been a ton lately, but we've got our scanner. We've got the scan query on here, the IV reversion stocks. So we're going to keep a better eye on that for this upcoming week because I definitely want to try to identify some of those potential opportunities. But that's pretty much all we got for the upcoming week, right? We had a really successful week last week. Here we go. We made $3,663, 2.11% return, and more importantly, we did it in the face of a pretty big pullback in the market, which if futures are any indication, we might be seeing something similar this week. So that is what we want to defend against. I think we've got a decent plan playing earnings as opposed to some other regular long positions that gives us a little bit more diversity, right? Because earnings are kind of also disconnected from the overall market. But I think with what we've got right here, I'll screenshot this and put this into the Discord server. I think we've got some decent options for the upcoming week. But let's get to the main event of the stream before we sign off, and that is going to be the giveaway. And we have one last second entry. Lucky number 21 from Todd Miller. And there you go. So I guess we've got 1 through 21. If you are wanting to enter the giveaway, type HT into the chat. If you think you've entered and you don't see your name on here, speak now or forever hold your peace as I pull up a random number generator. The min is 1. The max is 21. We are going to zoom in on here. I'm going to wait about 20 seconds to do this because I think there's a little bit of a delay. And if anyone is on this list or if anyone's watching that is not on the list, good Lord, already getting to that point where I can't speak. But if anyone is not on this list and would like to be on this list, please let me know and we can add you before we generate the random number for the winner of the HT giveaway. And question from Deadleaf in the chat, do we teach? Do we have a YouTube or a course? Yeah, we do have a YouTube channel. And I guess for the aggregate of what we offer, you could go to www.hourglass-trader as I buy time here to see if we have more entries in the drawing. We have a link right here to join our 24/7 chat room, which is just a link to our Discord server, which you could join, and we had it up earlier. But that has links to our YouTube channel, has links to our website, has links to the videos that we made. If you go to education, we've got videos that we've made right here for the HT wheel strategy that we like to run. Trading credit spreads is something that you're interested in. We've got whole write-ups and videos to go along with those. But I think the Discord server is a really good place to start. If we go, 1 second, I'm dealing with too many tabs off my screen right now, but Discord server, always going to be free to join and learn. We've got the beginner questions channel if you're new and are trying to learn what we're doing. But for a high level overview of where to start, we've got this HT videos channel where if we go to the very top, we kind of explain everything step by step in these videos. And I think this is a really solid place to start. No such thing as a dumb question in here. And we're happy to answer everything if I'm not available. I know we have several other really smart, really helpful people, really welcoming people. I think we have a really, really solid community of people who are always eager to help you guys learn. But it looks like we do not have any other last second entries. So we are going to the random number generator, and Cash, 7 was up on here. Nice try before we started. So drum roll, please. The random number is number 15. Who is number 15? Congratulations to D Milla 1 for being the initial winner of the HT giveaway. And you are now going to be the proud owner. If I can, again, pull up my Discord server tab. I might as well just open a new one. You are now going to be the proud owner of a new HT Yeti tumbler. And we could find the picture of it in our premium chat room over here there we go. You are now going to be drinking out of this chalice. So congratulations to D Milla. I guess reach out to me on Discord, reach out to me on Twitter, just someplace, and I can get your info to send you this. Congratulations. But we're going to be doing this every single week. We already stream every week, but I ordered enough of these to have giveaways for the next couple of months. So if you did not win tonight, great news. You've got another chance a week from today. So thanks for everyone who is stuck along with us for the entirety of the stream. Thanks for everyone who entered the giveaway. I think what we need to do is sign off the way that we always sign off, with our super corny outro, saying thank you for joining us. This has been the Hourglass Trader, where as time passes, we make money, and we hope to see you again next week with more money than you currently have right now. And I think, historically, we have. So we're going to try to keep that one up. Hope to see you guys again next week. Thank you so much for joining along this week. And let's have a good week.